All right. Hey guys, welcome back to the second part of the Trader's Mindset. This is a four-part series. And, last week we talked about the reality. I gave you guys a reality check, some basic trading psychology 101 stuff, and kind of the most important part of last week was trying to help you identify who you are as a trader. Um, and looking at some things that's going to help you determine where you fit in this big world of trading. And today we're going to talk about how emotions can destroy a trader, the truth about emotions, the truth about fear, the truth about greed. So by now, you should be a little clearer on whether you're a better fit for day trading or swing trading. If you haven't figured it out yet, you will by the end of this session. You'll know where you want to focus your attention. You should be able to understand where your current skill level lies and everything that you're going to need to improve it. And you should know by now exactly what you're getting yourself into wanting to be a trader. Because we know it's not all sunshine and rainbows, what a lot of people, lead us to believe. This is a full-fledged, four-alarm fire that, we have to work to put out if we're going to continue to move forward. So we're going to run into a lot of fires as we learn and get into this trading. And we're going to have to be able to put out each one. And each one is going to teach us something new, something that's going to help propel us to the next level. All right, hold on 1 second here. All right, so in last week we talked about how psychology was the Mod Podge that holds all of this together. That Mod Podge is that glue that you brush over puzzles so that you can move them around once you put them together. That's what holds all of this together. And we are the centerpiece. I know a lot of people talk about cornerstones and how important cornerstones are. In trading, there are no cornerstones because if you're in the center and you're the centerpiece, you're the nucleus of your trading, there's no way the cornerstone's hooked to the centerpiece. It's impossible to do that. They hook to the centerpiece through other pieces, but that doesn't work in trading. You have to be the center, the core, the nucleus of your trading, and everything has to be connected to you. So when we start as traders, this is how we look. We don't know what goes where. We don't understand that we have to be in the center, that we have to be that nucleus. So now you understand you have to be in there. After last week, now that you have to be the nucleus. Everything has to be centered around you, and everything kind of fits together and comes in full circle. It's a boring puzzle, and boring is successful. If you come into trading and you're looking for excitement and all of this, That's not consistent. We're gonna have exciting days. We're gonna have some kind of exciting trades, but everything we do has to be meticulous and consistent, and we do the same thing every day. So it could get a bit redundant. It can get boring, but in trading, boring is good. All right, so a couple of things that, if you didn't address them last week, I'm gonna refocus on this because this has a lot to do with our emotions going forward and how we react to certain things. One of the things that we needed to think about were what are our personality traits? What are the things that make us who we are? And you have to think about. I know I had to think about when I was growing up. Was I a natural risk taker, or was I a little bit more conservative? Did I sit back and let other people make mistakes and I learned from them? Did I put myself out there all the time, or was I calculated in everything that I did? And so I realized that, I was thinking about when I was running around in the summertime with all my friends and our bicycles. Back then, Evel Knievel was big. So we would build ramps and jump our bikes. Well, I would never be the first one. I'd always wait for a couple of people to do it because I wanted to make sure that the ramp didn't break, because that happened a couple times, that it didn't fall apart when you tried to jump it. And was it a safe distance or a safe angle to where when we came down, it wouldn't, it wouldn't be too dangerous. So I knew coming into this that I wasn't a big risk taker. Back when I opened up my first AmeriTrade account back in 1999, I knew I wasn't a big risk taker. But even though I didn't know what the hell I was doing, I still would not take big risks. I just bought the stocks that I was familiar with, like Pepsi and Coca-Cola. The ones that I made money on, or not make money on, but that I won when we did the little exercises in high school and stuff. So I knew that. And that's something that we have to dig into, because that's going to help us understand what type of trader we need to be, what strategies we need to focus on, and everything. And we get deeper into this in the next couple of sessions. How was I brought up as it relates to risk? Like, did our parents focus on saving, or did they set the example of whenever we get a couple of extra dollars, we spend it? There are a lot of people who are in big trouble because I think we talked about this before. When they got the stimulus checks, and then they started getting $600 a week in unemployment, and a lot of these guys did not even make $600 a week at their job. They've never made that, and they were making more money than they've ever made, and they were getting a pass on having to pay their rent. And okay, they were never taught to manage their money. They were never taught to save. So everything that they saw was whatever we get, we spend. And you have to think about that. How was I taught coming up, related to risk and money? How was I brought up as it relates to money? There's some, I'd say a lot of people who were brought up, the family didn't have a whole lot of money, they were struggling, but they despised people that had money. So they taught their kids that it was that money was the root of all evil, and only evil people had money, and that was, I guess, to make them feel better about not having anything or whatever. But it was translated to the kids, and you have a lot of people in trading that actually self-sabotage themselves because they want to trade, but then if they start making money, they start feeling bad about it. So it's, you have to think about all of these things, how it relates to you and your trading. And these are things that, as we go through mentoring sessions, when we're talking about the psychological aspect of it, we talk about these things. And once you realize how something is affecting your trading, you're able to make adjustments. But if you don't think about it, you'll never realize what's affecting it. You'll always sit there trying to figure out, why am I not making money? Why am I not consistent? You know, I can make winning trades, but why can't I continue to make winning trades? And so, you know, these are the things that if you think about and you can connect the dots, you'll be able to figure out why. Because like I said, learning these strategies are really, really simple. You know, take the opening range breakout or breakdown strategy. It's really, you know, really, really simple. Like the one we did this morning. You know, here's a 5-minute opening range low. As soon as it breaks the low, you get in, and you start taking profit. I mean, the only thing that makes it hard is us. If we sit here and we try to come up with a reason why not to take the trade, or why we shouldn't do this, or why we shouldn't do that, or we have our target set, and why we take it off too soon. These are things that can affect our trading, but it's directly related to some of the baggage that we're bringing into trading, and it's all from us growing up. And here's some factors that affect your trading psychology. The visual perception. And I've always said trading is like an art form. When we all look at charts, we're going to look at it differently. One chart may look one way to you. It may look another way to me. It may look another way to somebody else. It's all in how we perceive it. Some of us just focus in on what's happened in the last 30 minutes of the chart. Some of us are able to kind of zoom out and look at the big picture. It just depends on, our visual perception, our mood, our emotional perception. If we're mad, we're going to view the chart a certain way. We're going to trade a certain way. If we're happy, we're going to view the chart a different way. We're going to trade a different way. So our mood creates our emotional perception of what we're looking at. And then our environment, our past or present perceptions are going to come into play too. And like I was talking about, how if we were taught that money was bad, then we're going to perceive money being bad. So we're starting to win. Subconsciously, we're going to kind of slow that down. We're going to kind of cut it back, and we're going to talk ourselves into not making money. But it's funny how strong the perceptions are that we're brought up with. I know this might be a little crazy, but think about if you are, we're brought up and we're taught not to drink water out of the toilet. All right, just drink water out of the faucet. Even though, the water is coming from the same supply. But we're taught that. And we're taught it's nasty, it's dirty, and that we don't do that. But what if we were taught the opposite? What if we were taught, hey, the water comes from the same place. So if you're in there, you can dip a cup in it and drink it. It's the same water. And we were taught that. And another group of people were taught that it was bad. You know, you're gonna have different perceptions. You come from two different environments. So it's all of this is really relevant to our trading, and that's why it's so important that we spent that time last week talking about trying to identify who we are as a trader. What traits, what things are going to be more important to us in helping us determine whether we want to be a swing trader, whether we want to be a day trader, whether we want to trade stocks, whether we want to trade options, whether we want to do futures. You know, it's all of that's really, really important. All right, so how many of you guys are can see the painting or the lines rotating around the center? If you look at it, is the picture still to you, or is it rotating around the center, the black hole in the center? So you're going to have some that can't see the rotation. To them, it's not moving. And some, they see it moving. No, it's all in our perception. Now look at this. Are these lines, are the horizontal lines straight, or are these lines at an angle? The horizontal lines. How do you see these? How many people see these at an angle that are able to type? Because I found out last week several people are on their phone, they can't type. So it looks like an angle, right? All right, so let's take a look at this. I'm going to draw a straight line across. All right, straight line. Let's keep going down. Straight line. They look see how they look at an angle? And then now I just draw straight lines across the screen, and it's actually straight. It's just, it appears to some people to be at an angle. It all depends on how you look at it. And that's why so many people look at one chart and see one thing, and look at another chart and see the other. So if you look at these two charts, which chart is to you looks like it gives you the best profit margin? Which one do you think is going to give you the biggest move and the most money? Everybody's going to say the right chart, right? Most people are going to say it's the right chart. But to be honest with you, it's the exact same thing. They're both 5-minute charts. They're both showing you the same time frame. The only difference is the scale on this is different. This appears to be giving you the biggest move. Actually, it's all the same. So again, it's perception. And if you're trying to follow somebody, and that's why I feel it's so important that we're looking at the same chart. Why I feel it's that important that when we're talking about a trade and I'm trading, that we're streaming live so you could see exactly what I see. Because you may not see it at first. You know, the way you look at a chart may be a little bit different. And when you see it through my eyes, you'll be able to connect the dots, and then you'll know what to look at through your eyes. It makes all the difference in the world. All the difference in the world. So perception, guys, it's a big thing. How we perceive what we're looking at, how we perceive the data, how it comes to us is a big deal. Because you'll see a lot of people are what may ask me about a ticker that looks really good, but then when you actually look at it, there's no range. It looks like there's a lot of range because the scale may look like this, but it's actually not, because there's just not enough room between the prices. So we have to make sure we understand where perception falls in to what we do. So what is the most destructive emotion you feel while you're trading? So think about that, because that's the first emotion that you're going to need to work on going forward. Whatever you feel your most destructive emotion is while you're trading. Is it fear? Most new traders is fear. You have greed. Yeah, you have anger. You have revenge. I mean, there's a lot of emotions that we feel in the course of our trading. So we have to determine what emotion is the most destructive to us. And then we have to find the root of that emotion. But I promise you, the root is probably going to be from one or two emotions. And that's what we're going to talk about today. In day trading, it's immediately obvious. It becomes immediately obvious to you. Your emotions can be your worst enemy. The control of feelings or emotions should be the primary focus of day traders. However, it should not be something that we spend all of our mental energy on every day. We have to develop a process to where we're able to come in and act without worrying about our emotions getting mixed up in it. And then when we start to feel it, we know when to stop. And I think I've proven beyond a shadow of a doubt to you guys what happens when you get upset about something or you get overly emotional and your emotions creep in, what you have to do in order to manage that. And most of the time, it's stop, log off, shut down, go do something else. I mean, my daughter a couple years ago bought me one of those boxing desk punching bags. She gave me a little beat desktop beat scene to try to help me. My wife gave me some bubbles to blow. I mean, you'll feel it. And one of the key things we have to learn is how to identify it, and then how to put it back in its place. Because you will feel it. You will know when that emotion comes. You should know already. It's just that most of us, when we're new, don't really understand how to manage that or what to do when we feel it. Now, there are going to be things that we could do without having to walk away. But if that doesn't work, then, obviously we have to walk away. Emotions are like these squeaky voices in our head. They're part of you that freaks out at uncertainty. And uncertainty is a big part of day trading. A big part of any type of trading. So what can we do about that? What do we do about this uncertainty that's going to trigger all of these emotions? The problem has to be dealt with proactively. We have to work on this thing up front. We have to have defenses against our own primal reactions, and we have to be able to channel them into the right areas so that it could support what we're doing. We have to learn how to manage them. We cannot eliminate emotions in our trading. If you try, it will destroy you. We need our emotions. Our emotions are what keeps us safe in the end. We just need to know how to manage them and understand them a little bit better so that we could use them to our advantage in our trading. Some people say you need to trade without emotion. You'll spend all the limited amount of mental energy you have in the morning trying to suppress and fight your emotions that you wouldn't be able to trade worth 2 cents. And that's just the God's honest truth. So what we have to do is take these emotions and use them to our advantage. So the two most powerful emotions in trading are going to be fear and greed. And these are feelings that are the direct results of anger, depression, desperation, anxious, revenge. A lot of the things that you guys mentioned as the emotion that hurts your trading the most. So we're going to go through all of these things. What happens if we come in and 3-4 days in a row, we end up red? None of our trades work out. We can get mad. We can get depressed. If we need to make X amount of dollars to pay bills or something, we're going to feel desperate. We're going to feel anxious. And if we take these things personally, if we take a loss personally, then we're going to want revenge. And taking losses personally is the worst thing you can do. Because then you humanize the market and you're in for a world of trouble then. So our minds are hardwired with fear. It's the vital, indispensable reflex that keeps us alive. Okay, it serves us well when we're having to run away from something. How when we get scared, our adrenaline starts pumping. We tend to be able to run faster. We're stronger. It's needed. But when we don't understand how fear relates to our trading, or how we need to develop it so that it helps us in our trading, it becomes overpowering, and it takes us away from being calm, cool, and collected that we have to be when we're trading. And so that mechanism meant to keep us safe turns into what kills us. And that's what happens in trading. New traders get beat up the most by fear. Their lack of experience creates overconfidence, and that creates recklessness, and that could cause big losses. So you could come in with too much fear and never trade, or you could come in with no fear and be reckless and lose everything. So either way, fear is something that's really detrimental if you don't get control of it. So fear can happen to us in two different ways. First, fear can take over just before we enter a trade. You look at it, you look at your charts, you see a perfect setup, and when it's time to get in, you freeze. You question the strategy. Did Ed pick the right stock today? Because he has a habit of picking shitty stocks sometimes. So instead of taking a trade, you worrying about whether I took, and believe it or not, somebody emailed me and was mad because they didn't take SQ because they thought because I took it, it wasn't going to work. Somebody actually emailed me that today. Which, I just stopped thinking about it at that time. But you start questioning things. You start thinking, well, maybe this trade is jumping around too much. It's too risky. But that should not even come into the equation when it's time for you to take the trade. If you felt the stock was too risky, that should have been determined before it was on your watch list. So, there's fear creeping in. So by the time you get over this and the time you decide, let's take the trade, you're way too late. Way too late. And then you get mad, and then you email me because you're mad. But that's fine. I'm here for you to vent. I got thick skin. I can take it. The second scenario happens when you're already in the trade. Your fear can make you sell well short of your intended target. All right. And you see that. Oh, I got a perfect example that I did. I did this on purpose at the end of the day. That's why I wasn't saying anything. Perfect example. Right here. I knew we were going to pop. I knew we were going to get a bounce before this thing sold. It's part of understanding price action and kind of how stocks tend to move. I knew this was going to try to bounce. So I went ahead and took it off, and you guys see it sold all the way. Sold all the way down close to 130. I can't remember what was the low on it. But it did exactly what I would have wanted it to do going into the close. But this is what I'm talking about. Taking it off before you can actually make a profit. Not every trade is going to do this. Not every trade is going to sell like this. Now, there are times in the market where we get these moves in abundance. But most of the time, we may get one or two stocks to move like this. And we just have to be in that stock, in the right place at the right time for that move. If not, we miss it. But the moves are there all the time. So, and like I said, there are a lot of people that didn't get in. They didn't take it because they thought this was a stock that wasn't going to work. They took it all off here because they thought it was going to stop. They didn't think it was going to sell anymore. Think. You got to stop thinking. Once you're in the trade, unless you really know how to read and interpret price action, stick to your predetermined trade plan and let it work. That's all. And don't think about it. Just let it work. Sometimes I bitch, moan, and complain, but it's taking my mind off of wanting to do something with it. So that's the second scenario. Fear can make you sell well short of your intended target. Why? Because you don't want to lose money. You don't want to be wrong. You don't want to feel invalidated because the trade didn't work out. That's okay. That's part of the business. That's part of the business. And we have to take the good with the bad. But we can't let what's happening to us cause us to get overly emotional. The hard part is sitting there watching the stock tick up and down. If you're short, green ticks will will make the hair rise on your neck. If you're short, green ticks will. If you're long, red ticks will. And like I said, the move that we had today, very seldom does that happen. It does not happen all the time. It's gonna sell off. You're gonna get a little bounce. It may sell off some more, or it may bounce all together and we just get a base hit. It is what it is. We always like follow through. I love stocks that follow through. But again, that doesn't happen all the time. I think it happened last week on Airbnb. Was it Airbnb or DoorDash? I can't remember. That just sold off hard. And it never gave us any fluctuation until it started to bounce. It just doesn't happen all the time. So we got to be prepared for that. So how did I overcome fear? Number one, I got educated, because I wasn't educated in terms of the psychological aspect of trading. That's when I was fortunate enough to find the Mark Douglas videos that had just come out. I was fortunate to find that. And unfortunately, it was right before he passed away. But that helped me understand and connect the dots. And because I was a teacher, and 90% of our professional development was psychology, as a matter of fact, I need to go back and apply these classes I took, see if I can get my master's in psychology, or what I would have to get, because I've got a lot of graduate hours in these psychology courses that we had to take. But listening to him, I was able to connect the dots. And I forgot when I started trading the value of education and how important it was for somebody to help me make sense of this. And so that was the first step. Then I learned one setup, and became proficient with it. And at that time, we were going through this long-term bull market, and you could blindfold yourself and throw darts at the wall and hit bullseyes. That's just the type market we were in at the time, if you had a strategy or an edge. So I learned at that time it was a 15-minute opening range breakout. So now I trade the 5-minute. At that time it was a 15-minute. So I became proficient with it. I practiced it. I spent hours looking at all different kind of ways the stock set up, how it moved, everything. Now I admit I practiced with my money in the live account more than I should. I did not want a simulator. I didn't want that, because I knew that if I made some money on a simulator, I'd be pissed that it was not real. And that was that. But that was the wrong attitude. But that's what happened. But at night I used the on-demand feature on Thinkorswim, and that was it. I earmarked X amount of hours every night once my family went to sleep, and I spent on Thinkorswim. And that's what I had to do. The more I practiced entering trade, the more I practiced, the more entering trades became automatic. I wasn't scared because I knew that if it didn't work out, I would stop out and the next trade may work, or the next trade may work. But no matter what, I wouldn't lose my account. That not all trades worked. You just had to manage your risk. Cut your losers off when they hit your technical stop or your max loss stop, and maximize your winners. And so letting the winners run was really hard. All right, so I started with small position sizes at first. That helped reduce the effect of my emotions. I wasn't dealing with a lot of money. I was okay with losing. So it worked out good. I hid my P&L so that I couldn't see whether I was up or down on the trade. That's key. I was trading my P&L. So if I got $50 and it got up to like 75 or 80 and then it came back to $50, I took it off because I didn't want it to go back red. But yet I could sit there and let my stop run and hit my stop, but I wouldn't let the trade run. And so that was a big issue. And I was trading my P&L. Now, just trade the chart. Just trade the price action. I never traded alone. I always felt I needed to be part of a community that traded the same setups that I traded, because when I was new, and even today, I needed support throughout the trading day. I could always ask questions to a moderator in chat when I felt lost. It was something that I needed, but the only thing that was missing was being able to watch them actually execute. You know, and as I said, that's the main reason I started this, because I wanted people to be able to see the execution happen. You know, what triggers on the chart and the execution. So I just stuck to my scans and my setup. And besides, you know, 80% of what's called out is BS anyway. You know, it just is. I mean, either somebody got it from another room or, you know, whatever. I just had to focus on what I was doing. You know, I had to eliminate the noise and just focus on me and my stuff. And that's how I overcame fear. Is I had to build up that muscle memory to where I could just do it without thinking about it. Because the minute I started thinking, the minute I could think of stuff that would cause me to be scared about taking the trade, scared about taking a loss, and we had to get away from that. It's why, you know, playing basketball, we had to practice free throws, because you never know when you're at the end of the game and that free throw can win the game or not. How much is on that? And you didn't want to go up thinking about, okay, I need to bounce it 2 times. I need to get the ball in the right position. I need to focus on the front of the rim. And when you're thinking about all these things, you start thinking up fear. You start thinking, okay, what if I forget this? Or what if I miss this? And then your mind is gone and you end up messing up. So we do that so that we could get up there and just shoot without without even thinking about it. Golf is the same way. You need to swing that club as many times as you can and just get that muscle memory, because when you start thinking, then you'll think yourself into hitting a bad shot. So once you have your education out of the way, once you understand how the markets move, you understand how to build a watch list, how to execute your strategy, you want to stay small until you're ready to start ramping it up. There's no shame in making $50 a day to start out with. Do you know how many people would be happy just making $50 a day on average for a month? Do you know how many new traders would die for that? I mean, and that's the truth. You can't make $50 a day. I mean, you can't make $100 a day until you learn how to make $50 a day. You can't make $500 a day until you learn how to make $100 a day on average. I'm talking about a daily average here. So what I did was I slowly increased my share size until I found my comfort zone. 300 to 500 shares on, a higher price range stock. That's what I like. That's what my comfort zone is. I was not comfortable trading 5,000 shares of a $2 stock or a $5 stock. I was not comfortable doing that. So it didn't make sense for me to try to trade that. I was more comfortable trading 75, between 50 and $150 stocks. Now, obviously, I've extended the price a little bit as I've gotten, down the road, but that's what I like. Because if you look at this, like what we did on SQ, this was a $200 stock. Stuck to my $300 shares, and we made, how much did I make? I don't even know yet. Let me bring it up. No, that's not it. Where is $537.29? Just trading 300 shares. And I didn't even get another trade off. Because when I left for lunch, the other stock I was watching set up, I wasn't here to trade it. So I only got this trade off. But you find what works for you, you stay consistent. Now, obviously, I can trade more shares now. You've seen me trade 1,000 shares before and stuff. But what I'm trying to show you is that's where my sweet spot is. And that's probably where a lot of people's sweet spot will be. And when they really get themselves in a good place, you can start trading a little bit more. You'll have more money. So you could trade 1,000 shares and risk $2 and it not bother you. You could risk $2 to make $5 and it wouldn't hurt you. So you have to grow to that point. So like I said, slowly increase your share size and your risk. Once you become uncomfortable, go back to the previous spot, trade for a little while longer, and then try to bump it up again. And that's how you start doing it. I can't tell you how many traders I work with that for about 2 or 3 months, they made money each month. And they were trading like 200 shares, and then all of a sudden they went to 500 shares, and they had a red month, and then they had another red month, and couldn't figure out why. You went to 500 shares, you didn't stick to what got you there, and now you're in a bad spot. And they have to start over, build that up again, build that confidence back up, and keep going. But stick to your stop losses. One missed stop can destroy a week, a month, or several months of hard work. Okay, it's happened to me a couple of times, years ago, where I might have made 30. I never forget. I made $3,800 over the course of 3 months. That's the most I've ever made. And I came in the next weekend. I jumped in a trade, and I lost $5,000 because I refused to stop out. I thought it was going to come back, and it never did. It just kept going against me. And I've done that a couple of times where I wiped out a week or 2 weeks or a month's worth of profit because I didn't stick to my stop. And it's all because of the fear of being wrong or the greed of wanting to make more money. All right, so remember, nobody is perfect. You will all make mistakes. I make mistakes every day. Well, today I didn't make one, thank God. I made a mistake yesterday. But we all make mistakes. But if you stay disciplined and trade within yourself, you're going to make it. All right, that mistake shouldn't cost you your whole day. All right, you make that mistake, you fix it, you get back on the horse, and you ride. And you don't think about that, what happened. You don't think about the money you lost or the mistake that you made. You just focus on that trade and executing the way you want to execute. Now, if you want to dwell on the mistake, you do that when you do your reflection after the market closes. You don't want to dwell on anything negative while the market is open and you're trying to trade. You don't want to do that. All right, so greed. Last thing we're going to talk about today. Greed is just like fear. It's inherent in us humans. It can't be avoided, only tamed. We have to control it. We have to use it you have to use it to your advantage. And we can all do that. Obviously, we've got to have some greed in order to make it happen. Hold on a second. I got a cat fight. Sorry about that. We got a crazy neighborhood cat that likes to fight. So in trading, we actually need a little bit of greed. A lot of times that's the fuel that keeps us going. Wanting to make more money. It helps us make goals. It helps us to be able to take risks. But if we're not careful, greed can create overconfidence. It can make us reckless, make us break rules, makes us overtrade. And one of the big issues that I still have a lot is greed. I'll have a final target, but I'm like, no, I don't want to take it all off here. I think it might continue to go. It seems like it might want to keep going. and then it bounces and I don't take profit at that spot and end up giving profit back. You know, that's something that I'm dealing with. Greed also makes me take stocks that I shouldn't take. You know, I take the ones that I think will give me the biggest move when it's probably not the best stock to take because of the spread and stuff like that. But because the potential is greater, you know, it's like with greater risk becomes greater reward. That's not me. But greed can make you do things that you don't normally want to do. So greed can create overconfidence, make us reckless, make us break rules, and makes us overtrade. Okay, greed is by far the most dangerous emotion. Fear, even though it can be detrimental, usually doesn't make you lose big. Now, sometimes being scared to lose will keep you from taking your trade off, but eventually, you know, you'll feel the pain so bad you'll take it off before it gets too bad. Greed can destroy you. You know, it could lead to excessiveness, real bad inconsistency. And greed can put you into some pretty bad situations. So we have to make sure that, you know, we have that under control. You know, greed is what makes us chase guys that are saying that they're you know, making $10,000 a day or $20,000 a day. You know, greed will say, hey, that's what I want. That's what I want. So, you know, it can put you in some pretty big compromising positions. That's what got me started in penny stocks. That's what got me signed up with Tim Sykes initially, was that greed. I wanted to be a millionaire in a couple of years. And, you know, I wanted it quick. I wanted it fast. It was that greed. All right. But luckily, because of who I was, I kind of stopped myself from getting caught up in it. And it turns out that it worked out for the best in the long run. So the greed factor causes two downfalls. The first can occur when you're in a good trade and you exit with a small, well-planned profit. Okay, you're trading small. You can't scale out like you want to. All right, so you can only maybe scale out twice. You know, and we go back to this trade from today. Like I said, a lot of guys, 235 was it for them. Because they were trading 100 shares. They got in, they took out half here, 235. They're done. They couldn't get the rest of this. Now they could have, and it would have worked out. However, a lot of times it doesn't work out that way. Trying to chase this, you take it off and then you try to chase it down. It actually bounces at that point, and you end up giving back that profit that you made. And because you don't want to give it back, you're holding on to it, and now you're going negative. And that greed, because you're not happy with what you made, you want more. This is what messes traders up after the morning, when we have really nice trades, good momentum, and we know about 10:45, 11, the volume slows down. Stocks are trading in channels. We don't need to mess with it until we break out. But we want to make more money. We see stocks moving, and we want to make more money. That greed, it will cause us to get in and take trades that we shouldn't take. And God forbid one or two work out, then we'll do it all the time. And odds are it's not going to work, but maybe 2-3 times at the most. So we don't want to go through that. The second is when the trade goes against you, and now you're going to hold. And you hold with the hopes that it's going to come back and that the price is going to come back up. You don't want to take a loss. You're bringing in fear and greed together. And that happens. That's we can't allow this to creep into our trading. We can't. So that's why it's so important for us to make sure that we focus on executing the trade plan. That's why that exercise, and I know you're tired of hearing it, but I'm going to keep saying it, because until you break down and do the exercise the way it's supposed to be done, you're going to keep running into these things. That exercise is designed to teach you muscle memory to trade your trade plan no matter what, and help you deal with all the emotions that you're going to be dealing with when you go live. And if you don't have a plan for it, it's going to have a plan for you. They used to always tell me, and I always tell my teachers, that if you don't have a lesson plan or a plan for your students for that day, they're going to have a plan for you, and I guarantee you won't like it. It's the same way with the market. If we don't have a plan to attack the market's going to have a plan for us, and I guarantee you we're not going to like it. So we have to focus on having a plan before we get in a trade and execute that plan without fail. Now, I send out, it's impossible to do this in day trades because of how it moves. That's why I stream it live. In swing trading, I give you my trade plan, my entry trigger, my profit targets, everything. So theoretically, when it triggers, you enter, and then you just wait to hit the targets of the stop. It sounds really simple, but it's the emotional part that will prevent you from mirror trading. It is virtually impossible to mirror trade unless you have your emotions in check. It's virtually impossible. I have some guys that will follow me. Some will go off on their own. But whatever the case is, you have to have your emotions in check. You got to have that mind game in place. Because if you don't, it's going to be, you're going to have some very long trading days and nights. All right, so greed is a vital but lethal beast licking its chops inside of you. I forgot where I got this from, but I liked it. Greed should be locked behind bars. It should only be freed in the vigilant presence of leashes, restraints, and charged stun guns. In other words, when you're consistent, when you're sticking to a strict risk management system, greed is still there. It's just not running loose. It's actually driving you to set your goals and achieve your goals, but it's not running loose, causing you to have unrealistic expectations that you're having. You're taking loose trades. You're not sticking to your plan. All of that, when greed kicks in, that's what you're going to be dealing with. All right, so we've got to understand, going forward, we've got to understand the powers of fear and greed. We've got to understand the dangers and the advantages. Know that self-discipline is the key. In day trading or in swing trading, your primal emotions must be caught and confined, yet masterfully drawn upon when you need it. Fear, again, fear is going to save you. If you make a mistake and you allow yourself to get out of whack, fear should come in and stop you in your tracks. All right, greed should be the one that helps you stick to your profit targets, making that money, but it shouldn't get out of hand. All right, lock them down, scrutinize them, train them. Talking about you against you. Okay, that's the quintessential human condition. It's us against ourselves in the mental aspect of trading. Making great money in day trading and in swing trading is all about beating that human nature. Everything that we were taught growing up, a lot of that stuff is detrimental to us trading. So we have to retrain our brains. That's why I share everybody I mentor, I tell them to watch that Mark Douglas video, those series of videos that I send out. Because it's all about retraining your brain, understanding how the market works, what makes it move, so that you can understand why your trade is not going to win every time. Why you have to trade every setup as it comes and trust the fact that at the end of the week, at the end of the month, you're going to make money. Okay, yeah, I'm going to have red weeks because, sometimes I can screw up really bad, but I'm not going to have a red month. I haven't had a red month and I can't even remember, but I've had red weeks. They're going to come. For one reason or another. And you can't let that get you down. You got to keep doing the same thing over and over again because you're going to get good trades. You're going to get explosive trades. And then you're going to get base hits. But you add them all up together with your losses and you're going to come out profitable. And that's what it's all about. All right, so any questions? All right, so the next two sessions, we're going to build off of this. Everything's coming up to a climax. This whole thing is to try to help you deal with these emotions that we experience everyday day trading. I'm going to stop. I'm over an hour, so I'm going to stop the recording. But I'll answer your questions, any questions that you have. I'll go ahead and answer them, but I want to get this video up and going.